very excited to be joined this morning by CIBC and their partners at CIBC World Markets and CIBC Mellon, and quite an impressive crowd of investors to celebrate the fourth suite of CDRs, Canadian Depositary Receipts, making their debut yesterday, now listed on NEO. It's been just over a month since we saw you last, and you're now 2 months into this. It's clear to us that you and the team continue to demonstrate it now more than ever that you have a laser-like focus on ensuring CDRs become the de facto way for Canadians to buy and trade US mega cap stocks. We're very proud and honored to be a partner. We continue to hear daily from investors, advisors, and PMs about their interest not only in the exciting suite, but also having seen what they can do. They're all asking, when can I get this company in CDR format? So I suspect you and the team are going to be busy for a few months to come as new ideas and opportunities present themselves to you. With yesterday's launch, you've now got 10 CDRs in market. The NEO team and I are more excited than ever about the future, as seemingly every day we hear how these things are addressing a clear challenge in our community, with Visa, PayPal, Microsoft, Facebook, and Disney trading as of yesterday.
As an organization, we are extremely excited because CDRs are really something that is very near and dear to what we care about, innovation and doing what's right for investors. And Elliot and team, what is great about it is that not only is the intention absolutely bang on, but you also clearly see that there is substantial interest from the market, and this is only the beginning. And you guys are executing, because it's not only about coming with a product and having interest, but it's also making sure that it's a high quality product, and that is what we see day after day.
The CIBC team is extremely excited to be here again. The growth of the program has been fantastic. Doubling now our lineup from 5 CDRs in the market to 10. It's like unbelievable. It's like a dream. We didn't come here to just do 1 or 2 CDRs, but to see us now actually have 10 in the market is outstanding. It's been a 3-year journey for many of us. We've talked to you about that before, but it's just remarkable seeing all the positive press and the positive support that we've been receiving in the market. I mentioned the positive press from the mainstream media. We've seen articles in the Globe and Bloomberg and National Post, seeing all the trading activity from coast to coast, from all the distribution networks, do-it-yourself investors and advisors alike, all really showing strong support. Hearing from advisors, Alex and I talk to them every day, hearing from them directly about how they're using CDRs in their practice, getting inbounds from advisors, getting inbounds from investors on what CDRs and what geographies they want us to tackle next. It's really, really exciting. And we couldn't be more excited about the future of the program. And truly want to say a very, very sincere, heartfelt thank you to our great partners at NEO. We couldn't have been here without you. You've been tremendous to work with, and couldn't say enough positive things about the partnership.
Elliot and Eric both mentioned, we now have 10 CDRs trading on the NEO exchange with the newest additions, repeated here, Microsoft, Disney, PayPal, Facebook, and Visa. Elliot also mentioned this, we're not stopping here. We have plans to launch more over the rest of the calendar year and beyond. CDRs are modeled after ADRs, and they allow Canadian investors to buy global stocks in Canadian dollars on a Canadian stock exchange with a built-in currency hedge. They trade just like any other equity and share some other features too. So I'll now take some time to go through how CDRs are similar and different from a direct investment in the underlying shares. So in terms of similarities, CDRs are listed on an exchange, they have no management fees, and are eligible to be held in registered accounts like RSPs, TFSAs, and RESPs. CDR holders on applicable record dates will also have rights to vote and rights to receive dividends. For the dividend payments, the investor should have an up-to-date W-8 form on file with their dealer to ensure that proper withholding rates are applied. And then finally, CDRs will be taxed in the same way as trading or holding the shares directly. As for differences, unlike directly holding the underlying shares, CDR holders will benefit from a Canadian dollar denomination for trading, Canadian dollar dividends. They'll be benefiting from institutional FX rates for any FX conversions made for the product, the currency hedge to mitigate currency risk, as well as fractional share ownership. So CDRs address three primary issues of global investing. The first issue is that certain shares are just too expensive for retail clients to own. In fact, the first CDR we launched was for Amazon.com, which trades at over $3,000 US per share, making it very difficult to include in portfolios. The Amazon CDR trades at around $20 Canadian, making it accessible for retail investors. And we were able to set this initial price because of a concept of $20 because of a concept called the CDR ratio. And in fact, this concept isn't new. All depository receipts, including ADRs, have this concept of the ratio. And the difference here is that CDRs have a ratio that is typically going to be less than 1, which will enable the fractional share ownership feature. In the case of the Amazon CDR, it was launched with a 1 to 200 ratio, where one share was equivalent to 200 CDRs, one share of Amazon. And by having the CDR ratio of less than 1, we're in effect taking the company's single share, breaking it up into fractional shares, which can then be quoted on a Canadian market in whole unit. The second issue of global investing is that obviously investing in global companies exposes Canadian investors to currency risk. And so we know that currency hedge ETFs are very popular in Canada, and CDRs have the same feature, but just on a single stock. The result of the currency hedge is that it will effectively eliminate any impact on the investor's return from moves in FX. And the third issue is that in order to invest in global companies, you need to convert your Canadian dollars, which can be costly. With CDRs, there's no need to convert Canadian dollars and deal with FX transactions and fees when investing. And further, investors will receive institutional level FX rates for any transactions done to manage the product.
This is a screen grab from Bloomberg, and it compares the performance of the Amazon.com CDR, which is our oldest and longest traded CDR, been out there since July 27th, and it was the first 2 months, so versus the underlying reference share. And as you can see here, there are actually two lines, but you can't really see them because they're perfectly mirroring each other. So the investor who is investing in the CDRs is using their Canadian dollars and getting a performance that is mirroring the US share. There will be a little bit of tracking difference. It relates to a couple of things. One is the currency hedge. There's a cost there, maximum of 0.6% per annum or 0.0024% per trading day. And the second is just from the trading mechanics of the currency hedge from a timing perspective. So sometimes there can be a little bit of noise, but as you can see here, it's not meaningful. While that slide that we just had was end of day, this is the intraday. So we get a lot of clients, investors and advisors asking about bid offer spread and how will it compare to the underlying. Again, here there are two lines, but you can only kind of see one. There's an orange and there's a white line. This is comparing the bids at every second. So this is tick by tick. And again, this is a screen grab from Bloomberg. This is the tick by tick comparison of the bid for Amazon.com CDR to the Amazon.com share. And as you can see, our market makers are doing a phenomenal job comparing or marking their bids and offers for the CDRs. And this again is just Amazon. We just took a 2-week window here just to show you as much data as we could. Similar to how ETFs work, it's important for investors and advisors to know that trading volume does not mean liquidity. So in all of these, the volume and the liquidity of the CDR is dependent on the liquidity of the underlying share. So if there is liquidity in the reference share, and there always is because we're picking the largest names globally and they trade more actively than any Canadian name in the market, we can instantly create or redeem to support a big order. There's a ton of good reference materials here for you, whether it's videos to explain how they work, how the currency hedge works. Contact details are there. We're here to support the product. We're here to grow. We're not stopping at 10. And the future, we're really excited for the future of this program.